let's get to the next conversation, talking about IHCL. The Q2 and first half is looking soft, but the outlook is what is strong, and that's what notes are saying this morning as well. Puneet Chhatwal joining in, MD and CEO of IHCL. Thank you so much for your time, Mr. Chhatwal. Great to speak with you. Now, it's been 14 straight record quarters. What is sustaining the performance despite Q2 being a little tough?
Yes, it is 14 straight quarters. Thank you for mentioning that, Tamanna. It's in line with what we have guided the market for. And what is sustaining this is very simple. Demand continues to outpace supply. Number two is our not like-for-like growth has been working very well for us in terms of margin expansion because it's mostly based on a fee-based model. Number three is our comprehensive asset management and brand management that we have done in upgrading our assets, putting monies in renovations, in other competitive advantages like AI and digital initiatives. And last not least, I would say the brands have gone from strength to strength. And each of the brand is not now dependent on the Taj. They're standing on their own feet, and each of the brands and each of the business is contributing, some less depending on their life cycle where they stand, and obviously Taj contributing the most.
What is the fastest growing brand apart from the Taj, Mr. Chhatwal?
I would say in terms of number of hotels, Ginger is growing rapidly. We have had very good 6 months for the growth of our homestay business in Ama. Cumin very recently crossed 100 crores in GMV. Ginger is getting close to 1,000 crores of top line growth. 7-8 years ago, Ginger did not even have 300 crores in top line. So there is a lot of growth happening, but obviously it's still at a low level because some of these brands are either 3 or 5 at the most, 7-8 years in business, because Ginger is also completely reimagined. It's not what it was when it got launched. So if we take the new and reimagined brands, they're very much in transition from an infancy into a growth phase.
You know, you've had cumulatively about 22% RevPAR growth in first half. Does this sustain going forward, and does the top line sustain going forward?
Yes, also very interestingly, TajSATS non-aviation business, which means more like institutional catering, has now hit around 12% in a very short time. So we do believe, given the growth in TajSATS catering business, plus the non-aviation business, and a very robust RevPAR growth that we are seeing because of demand outpacing supply, and our renovated portfolio, that we should be able to maintain the double-digit top-line growth guidance that we have given to the investor community.
Okay. In terms of margins and how you're looking at margins going forward, you've managed to keep margins. In fact, margins have stayed steady, 27.9%, despite renovation costs. What is the margin guidance, Mr. Chhatwal, and do you expect renovation costs to go down in second half to aid margins?
No, I don't think the renovation costs in second half might ease off, but because it's a high period for occupancies in almost all destinations. But our margins are very healthy. We had done almost 35% last year. We see no reason as to why we would not be able to achieve those figures that we achieved last year, or even more going forward.
What's the fee income and new business outlook? Because these two have been robust in performance for the first half.
The fee growth is coming from our not like-for-like growth. We're opening so many hotels on management contracts. So with the growth in revenue, obviously the fee also increases, but main increase is also coming from all the hotels that we've opened in the last 2 years. This year, we should easily open around 36 hotels, which is 3 hotels a month by the end of the year. That means only 10 more to go. We could even end up opening 12 or 14, maybe we get to a figure of 40. So I think that is contributing significantly to the management fee income. And new businesses, because they are small, so from a percentage point of view, when your base is small, the growth level will be higher and must be higher, because if it's not high, there is no sense in staying in that business.
All right. Thank you so much for your time, Mr. Chhatwal.